Good morning. I hope you guys doing well and welcome to today's edition of the Daily Market Update with me, Alejandro Zambrano, the Chief Market Strategist with ATFX. We're going to take a look at the markets. There's some interesting stuff happening, in particular with the Aussie dollars. We're going to take a look at that. Of course, we're going to talk markets as we usually do. Now, if you're new to this is just a daily market update that we do at 9:30 a.m. And I've actually been doing this for quite a few years now. Started out doing it for Daily FX, where I used to be a strategist from 2009 to 2016, and then set up my own little firm called LondiniumFX.com. I'm still running that, and then was working for a company called Amana Capital, which are big in the Middle East, and did a website for them called tradecaptain.com. And now, since about 3 weeks, I am the chief market strategist of ATFX. I'm managing the team in Dubai, London, and also in Hong Kong and mainland China. So we're working on a few new things coming up, probably not this quarter, but over the next few months, we'll definitely have more content. And one of these is this daily market update. And what I'm going to try to do here, why you should stick around, is that I'm going to share with you the levels in the charts that I think are important. I'm also going to try to explain to you what's happening with the help of news and macro fundamental news. So we're going to do that, and we'll begin with just spending a few seconds on the risk disclaimer. I can see a few new names here, and I want to make sure that if anybody new to the market is fully aware of the risks. Let's spend 10 seconds on this, and then we're going to get going. Okay, so why should you listen to me then? I mean, maybe because I'm profitable in my trading. That's a good reason. Maybe because I've been trading since 2006, and I've done a lot of different mistakes. So probably whatever you're doing right now, probably tested it or tried it before and have a bit of an opinion on it. So that's definitely a few good reasons to stick around. Now, everybody's getting all excited about the Aussie dollar. Why is it like that? Well, the Aussie dollar is down today with 0.77% or 55 pip. And in a market which has been very quiet for a very, very long time, in particular something like the euro dollar, which is sort of the main currency pair that people trade, this is quite a big move. And we're taking out now, trading below the February 19th high low. Market is sliding to the downside here. But this is not the best pair to trade. Seldom you should go for the first option when trading the markets. Most of the time it's better if you look into a few different pairs that are closely related to trade the same trade area. So we're going to cover that today, and then of course we're going to cover the euro, GBP, dollar, yen, crude oil, gold, S&P, and the DAX 30. But let's begin with just talking a bit about the GDP figures. So this is the Aussie dollar GDP figures here, and the gray bars shows the quarterly changes. And let me just see here something. Yeah, quarterly changes, and you can see here how the quarterly changes were holding up relatively well here, and then in the last 2 quarters we're having quite a significant slowdown here, slowdown that we haven't seen for quite some time. Now, this is just happening around the same time, that we saw very weak stock markets across the world. We have also seen, of course, the contraction of the Chinese manufacturing sector. So I think all of this makes sense. Now, what's happening here, though, and what's interesting is that moving down here, and people are suddenly starting to say, oh, maybe the RBA, which is the Central Bank of Australia, maybe they're going to cut rates. And I think it was JP Morgan which issued a comment today and said that they might cut, I think, in July. So looking to cut. And what's also interesting as well is that the RBA, Central Bank of Australia, it's been one of the few banks over the last few weeks and months that have openly said that they would be ready to potentially cut interest rates. Whereas most other central banks, they're just saying we're not going to raise interest rates. So that's sort of causing people to get excited. And you might remember we did actually mention this. I think we started to see those sort of comments here, December, November, from the RBA. This is just the Australian dollar versus the New Zealand dollar. Now, where would I put my focus on? If it's not here in the Aussie dollar, let me explain to you why I wouldn't put my focus here. The reason why I wouldn't trade this is because you have this low here, and then you have this low here, and then you have that big sort of flash crash levels. And we need to clear those. This is a hurdle. Until we take in these levels out, this market could quickly go to the upside. And if you look at something as well like the euro versus the USD, this is your daily chart in the euro, it's just trending sideways. So you're not going to get any help from people buying the euro here, selling the euro and buying dollars. And if you look at something like GBP USD, okay, it's moving down a bit, but overall a bit of a bullish bias. So the dollar is not really in favor right now. Let me show you this. This is the dollar index. So this is the dollar index, and the dollar index is firmly trapped in a range since October 2018. And we need to take out 97.71 or 94.99. So doing the plain vanilla thing like everybody else and just shorting Aussie dollar versus the USD might not be such a good idea. So what is then, according to me, in my opinion, a better idea? Well, you can look at something like this. Aussie dollar versus the Swiss franc. So this is the Aussie dollar Swissy, and here we're still quite far away from sort of flash crash levels in January. Okay, these levels down here is the 68.79 level. Now, what makes interesting for a trade idea is this. You can't necessarily see it here very well, but flip on to a 6-hour chart, and what do we see? Well, you see a head, you see a left, and you see a right shoulder. That's correct. This is the famous head and shoulders pattern. You can draw it like that, but I'm going to draw it like this. And here, the difference between the head and the neckline gives you the target. So you're looking here at the difference of about 216 pip. Place that at the neckline, and here we need to be more cautious. It's not just about shorting on that sloping trend line. I do like to wait for a break to a horizontal level. So we can sell at 70.38. I think that would be interesting. Alternatively, if you really want to get involved, I mean, it's possible to short here, but I will wait for something like a break to this level here. This is 70.38. And what most people do is that they sell on the breakout and then the stop loss just goes at the nearest high, which is up here at 71.23. So if we trade this, sell here, target, let's just target the actual head and shoulders target on here, and then stop loss goes on the other side. Then you're looking at a risk-reward ratio of 2.5, 2.15. So this is a decent risk-reward ratio, and you don't have the problems as you have with the Aussie dollar, where all sort of support is being there. By the way, let me know as well if you can hear me well and see my screen. Now, let me check here. We should be available. Guys, just let me know in the chat box if you can see everything. I'm not sure if it's actually working. Okay, so this is interesting. Now, my preference is that this settles here, and then tomorrow we have that break. That's what I would prefer. Now, there are other things as well which are interesting. You got the Euro Aussie, and the Euro Aussie is looking interesting as well. You see here, this is an ascending triangle. You have a high here, and a high over here, and then you have that upward sloping trend line. Here, the difference between okay, thanks so much, Ronnie. The difference here between the upward sloping trend line and this level here is the target. So this is 297 pip. Place that here at the breakout level. Now again, the challenge here, if you look at from the daily, is that this is a massive big daily candle. So if we go long, stop loss would probably need to be placed down here somewhere. Risk reward ratio is still about 2 times. It is possible, if you want to as well, to sort of have a slightly tighter stop loss. Maybe work with something like 159.82. That gives you a stop loss of risk reward ratio of 3.23. But I wouldn't trade this idea today. Again, better if the market closes here, then maybe tomorrow goes a little bit lower and then breaks upwards. So we'll take out that high maybe tomorrow morning. I think that will be a better idea. And then you have another one here, which is also interesting. Unfortunately, though, because of Brexit, I'm not going to be trading it. It's way too much risk. But look at this beauty. This is the Aussie dollar versus the GBP. This is a daily chart, and the market here is trading in rectangle, or at least some sideways trading since pretty much April 2018. And this is not your standard rectangle because the levels are not exactly perfect, but you still have a sort of good idea what may happen on a break to the levels here. So the difference between this range here, the high and low, is 1,510 pip. And then just based on the daily here, for example, if the market tomorrow or even today potentially breaks the high, if it breaks today the high, then you can probably potentially have a risk reward ratio here. If your stop loss just goes below today's low, then you're looking at a risk reward ratio of 7.36. Now, we might not go all the way up. That's not important. In fact, I think 20% of the time, or 80% of the time, we're not going to go all the way to its target. But we might go halfway. And even if we do halfway, you'll be looking at a risk reward ratio of 3.84. And maybe you don't like to hold positions for a long period of time. I have changed my strategy where I just buy and hold, and then if it takes a week or two for the price to reach its target, I don't care. But if you're scalping, trading short-term breakouts, something like that, when this breaks to the upside, I think it should most likely be a relatively easy time to just trade and day trade this on the long side to the upside. And that is my outlook for the Aussie. So you see, there's interesting things here that are far much in the Aussie dollar, the plain Manila one. Here, take this level out. There's not a high here. I mean, where's the next high? The next high is here. And that high was from June 2016, which is probably the same time we had the referendum. And then after that, you have a high here at 205. The further away these major highs are, further to the left, the less interesting, the less of a resistance are they going to do. Because most people that have been trading probably since 2018 here, they all have their stop loss orders here most likely. They don't have them up here. On the other hand, people that have been trading the Aussie dollar, they probably do have their stop loss orders here somewhere, or maybe down here. It's a little bit tricky when you have that big candle. So that's my take on the Aussie dollar. Let's hope and pray we actually get a bit of action. If you just trade Forex, you know how boring it has been. So let's hope for a bit of action. Here's the Euro versus the USD. And the market is just trading sideways, as I just mentioned in the beginning of the presentation. A break to 112.12 could potentially cause this market to go lower. You're stuck in a bit of a rectangle. Also, yesterday's ISM non-manufacturing figures were really, really good. Already were they projecting a strong growth, but the number you saw yesterday is telling us that we have a very good growth. Remember, fourth quarter GDP figures that were published just recently, they were quite healthy. Not bad at all. So that explains maybe why stock markets are where they are. Now, if figures like the ISM and maybe non-farm payrolls and GDP numbers continue to print well, then most likely that's going to force the Federal Reserve that maybe by June or July or something like that, I think June they have a meeting, they could potentially raise interest rates. So it's important to keep an eye on the dollar around these major events. For now, though, it's just trading sideways. This is the GBP versus the USD, and The market, unfortunately, did trade below my trend defining level. I like to keep things relatively tight. And for now, this market is continuing to trade to the downside. But looking at more data, bigger picture, it still remains in an uptrend. And I rather sort of continue to go with the flow. But you need to see a break to this little downtrend. See, we're dealing with a small downtrend. And then you have this big picture uptrend. So if we take this level out, probably up, down, and up. If you really want to trade the GBP, again, maybe GBP Aussie, or maybe something like a Euro GBP, which is something we covered before that is more well behaved. Here's your dollar versus the Japanese yen. This is an easy one. We were talking about buying here last week. The market rallied to our take profit levels. I will book profits here, and this is resistance. We need to take out 112.16. When we do that, we could probably go upwards to maybe 113. I'm actually a bit surprised that we're not higher given the good numbers we had from the US. But as you probably noticed, people are not paying too much attention to macroeconomics right now. And it has to do with the fact that all the big central banks are literally just waiting. They want to have a few months of data before taking any action. So investors are doing the same. Now, again, take this out. You could probably maybe scalp it to 113. But my personal preference is to wait for that pullback so you have that decent good risk reward ratio. As for the price of gold, the price of gold is just at the lows here, at the levels where I think we can have a better profit taking. And I'm not extremely confident what's going to happen next, but we are dealing with a downtrend here. And shorting down here is not going to give you a good risk reward ratio. So I think we might revisit the lows at 1,301, maybe all the way up to 1,315. But here, the risk reward ratio starts to improve to turn bearish and attack the lows once again. Think about it. If the ISM figures are doing really, really good, and the economy in general is doing really, really good, and stock markets are where they are, then why are people still holding on to gold? Crude oil should be a relatively straightforward trade when we have a bit of a breakout. Right now, there's not a lot of momentum. People are literally just giving up on this one right now. Looking at it from a big picture perspective, the trend is bullish. If the world economy is doing good, if we sort of get out from this slump, most likely people will turn bullish and buy some more crude. Now, how can we trade that tactically? What's sort of the best way of doing? Is it just to buy? Well, you only buy gold or crude right now if you're really, really optimistic, because you're dealing with that uptrend, and it is possible to buy here. So you risk $1.1, and if we go up, we can maybe make something like $4.83. And if this head and shoulders with left, right shoulder, and then head, if that actually develops, then you looking to make maybe $10.50 by risking 1.3. But the problem here that there's not a strong trend here, unfortunately. So I would not trade that view. Rather, break to 57.89 makes more sense. S&P 500 is just a waiting game right now. This market is just trading sideways right now between 2,764.8 and 2,821.6. And this market is just trading sideways, so I don't really want to have a strong view here. I was bullish up until the March 4th when the price slid below my trend defining level. This doesn't mean, though, that potentially maybe something like the German DAX can go upwards. I think focusing a bit on European stock market indices is probably slightly better now. In the German DAX, as I mentioned, you have your left shoulder, you got your right shoulder, you got your head. Here's the break to the head and shoulders. You still have that target up here. And over the last few weeks, I said people could probably buy here. It's looking good. If you're still holding on to these positions, we just have a stop at 11,392, and then just see what happens. I think over the next few weeks, we'll be probably trade upwards. And if we revisit something like 11,536, I still think people will look to buy. And that's, guys, is the general market overview. If you have any questions, just put them in the chat box. As well, I wanted to show you something here. So I got myself an ATFX account. It's just a demo, but I just wanted to show you the spreads that they offer. This is your Eurodollar on the edge. So they have standard, which is anything less than, say, 5,000 euros, $5,000, 5,000 pounds. They have the spread there relatively normal, but if you look at the edge account, look here, euro dollar right now at 0.6. That's a very, very tight spread. And you can see that the spreads are very tight, like GBP USD, 0.6 as well, 0.7 now. And even when you start to trade some more funny combinations like dollar Swissy, we talked about dollar Swissy today, right? Why don't you check out what dollar Swissy is with your broker right now? Here with ATFX is at 1.4 right now. So in general, very tight spreads across the whole board, not just the main pairs. It's a little bit, when you go to your bank, then try to give you like a teaser rate, so they keep your interest rate low on credit products for a short period of time, and then sort of ramp them up. It's a little bit here, but a bit different. A lot of the big banks, the brokers, they're gonna give you very tight spreads here, but then everything just goes really, really wide, and suddenly becomes really, really expensive. So check this out. And what's quite interesting is that you can get the Edge account again for a smaller amount of money. In fact, if you come via me, so if you let me know and I forward your contact details to the team, you can get access to the Edge account if you're based in the UK for the equivalent of $5,000 in pounds, which is 3,000 something. And the same, you don't have to put 5,000 euros. If you put in the equivalent in dollars, which is, it's not 5,000 euros, but it's closer to 4 rather than 5. And not only that, we have this new thing. So for people that set up an account with ATFX and set up this Edge account, you get access to 2 30-minute sessions, coaching sessions with me. The first 30 minutes is for me just to understand what you're looking for in forms of trading strategies and maybe answer any questions. And then I try to figure something out for you and we do the follow-up. That is if you don't really know what you're doing too much, you don't have no strategy, nothing, then we'll do it like that. If you already have a strategy, then I can take a look at a few trading ideas and sort of see, are you working with the stop loss orders at the right place? How are you doing with your money management? How do you deal with take profits and things like that? This is all free and as part of the Edge account offering. If you have any questions on this, you want to take advantage of the offer, in the chat box, you'll see my email, alejandro.zambrano@atfx.com. If you don't want to go that route, you can always just go via my Twitter at AlexFX00. You can send me a direct message. I will still need to sort of put you in touch via email anyway, though, so the ATFX way is probably better. Okay, so we have a little question here from Marvin. What about GBP versus the yen? Okay, let's take a look at that one. Okay, so this is GBP yen, and the market is relatively close to these highs here. Now, if I just look at it from a daily chart, can't necessarily see a very good pattern. I think if the market, let me just get the snipping tool. Well, you just need to imagine this. If the market goes down like this, it's quite interesting. Say it goes down like that, and then trace upwards. That will be good. Because this would be a massive head and shoulders. Left, maybe a right shoulder here. And then you just have this. This could easily be something that can happen if we don't have if we don't have any Brexit. I think we could probably definitely be trading up here. If we have hard Brexit, probably revisit the lows at 140. Now today we're so close to this high here that you're starting to see people booking profits. You can see how the market was going up, right? And then you can see a bunch of candles. People are literally booking profits here, uh, and that's it. Now, should we short here? Is this the best opportunity to short? I'm not sure about that. Personally, I don't like to trade against the trend, so I wouldn't be shorting here. You would only short here if you're very confident that Theresa May's deal is gonna be not be accepted, and then on Wednesday next week, I think it is, you really think that the PMs of the UK Parliament is gonna vote and say that it's okay to have a hard Brexit. So if you really think they're gonna give us a hard Brexit, then I guess you can get away with shorting here. So yeah, I wouldn't trade this to the downside, but it looks like booking profits. Makes sense. Okay, I think we're gonna wrap things up. If you ever miss any of these market updates, please bear in mind that you can just go to the YouTube channel we all have. So you go to YouTube. So it's not my regular one at londiniumfx.com. It's actually at ATFX. Let me see here. ATFX UK. So this is the one. I'm uploading the videos here. I do suggest you subscribe. That will get you a notification. If you really want to have an email every time I upload a video as well, you can just click here and you get a notification. Otherwise, you just subscribe. So when you come to your homepage, you usually see it. The homepage of YouTube, that is. So check this out if you ever miss any of the videos. It's a good little thing. And we do have a few other videos here. I didn't, these are not my educational videos, but they're made by a company that, they have a quite solid track record. So could be good to check this out as well if you're looking for some free content. Just starting to. Okay, I think we're going to wrap things up. Marvin, thank you so much, and everybody else here as well. We had Ivan here, John, Marvin, Rich Bell, Ronnie, Tim, Vincenzo, and Sahid in the chat box today. Thanks so much for joining me, guys, and I hope to see you guys tomorrow, same time here at atfx.com. Thank you very much, and bye-bye.